Hello, everyone. Thank you for joining in as you all are rolling in. We are excited that you all are entering in for this afternoon's event. Before we begin, we would love to know who all is joining us. This should not be new to those who have been a part of our series. So to do that, first locate that chat button you should see at the bottom of your screen and change who sees your chat. To all panelists and attendees. And this is helpful for us because a lot of times you all have the same exact question as, one of your fellow alumni or just attendees here. So if you could change it to all panelists and attendees, that would be great. And if you're a VCU graduate, please share with us your graduation year and which program you graduated from. And if you're a current student, you can still do the same. Let us know when you're graduating and from what program. And if you're just a VCU community member or you just a VCU fan, love VCU, love coming to our events, let us know who you are as well. That will be very helpful for us. Thank you all so much. Love to see everybody who is chatting us in now. Thank you all. We're going to get started momentarily. We're going to let a few folks just join in. Thank you all so much. Like I said, for those that are just coming in, welcome and thank you all for joining us today. If you can locate that chat button at the bottom of your screen and change it so you can see all panelists and attendees. Let us know if you're a VCU graduate and your graduation year and which program you graduated from. And then if you're a current student, please do the same. Great. Thank you all so much. All right, well, let's go ahead and get started because we have a lot of information to get through today. I am super excited about this. So welcome everyone to our fourth panel of the Adulting 101 series, Tackling Student Loans. My name is Letitia Taylor-Smart, and I'm the Director of Alumni Career and Personal Development with VCU Office of Alumni Relations. Before I turn it over to our wonderful expert for today's conversation, I would like to go over just a few housekeeping points. We will be recording this afternoon's event, so don't worry if you blinked a little too hard and missed a few seconds of the discussion. A recording will be available. There's also live closed captioning available that you should see at the bottom. And if for some reason you're not seeing that to access, locate the live transcript button at the bottom of your screen. And once clicked, select show subtitles from the menu. And as always, if you're having issues accessing this feature, we do have our wonderful VCU alumni chat bot here for assistance. I would also like to thank those that were able to submit questions for our speaker while registering. We got a lot of great questions. We will try to get to as many questions as possible. And Carolyn did a great job of being able to put those in her presentation, but feel free to still submit questions via the Q&A pane of the control panel that you should also see at the bottom of your screen as we get through today's presentation. We will continue with questions that have been submitted during the event if time allows. So without further ado, I would now like to introduce you all to our expert speaker, Carolyn McCray. Carolyn McCray serves as the director of the Virginia Credit Union Financial Success Center here at VCU and has worked in higher education and college student development for the past 15 years. She earned her MAD in Education Planning, Policy, and Leadership from the College of William & Mary, her BA from James Madison University, and is pursuing her PhD in Public Policy and Administration from Virginia Commonwealth University. So she's a soon-to-be alumna of our university. Ms. McCray is an accredited financial counselor with the Association for Financial Counseling and Planning Education, with a passion for promoting financial wellness and building financial capability within her community. I'll now pass it over to you, Carolyn.
Thank you so much, Letitia. I don't know about the soon-to-be part. I just started the doc program this year, so we've got a few more years ahead of us. But thank you so much for the lovely introduction. Thank you for having me today. As Letitia said, I work as the director for financial wellness here at VCU. My job is to bring financial wellness to the entire VCU community, and I'm so grateful for the opportunity to come and talk with VCU alumni about repaying student loans. As Letitia mentioned, I've got got the undergrad degree, the master's degree. I'm pursuing a PhD. So I have a little bit of personal experience with student loans as well. So we'll talk a little bit about some general big picture recommendations that kind of work for the average student borrower, especially from the VCU community. And again, thank you all so much for sending in such wonderful questions ahead of time. Because of all those great questions that we got, we have kind of reconfigured the presentation today to better address your questions and concerns. So we've kind of pulled them into these 4 main topic points. So you will see that we're going to talk a little bit about some best ways to tackle repayment. We're going to talk a little bit about consolidation and refinancing and the difference between those two. We're going to talk about student loans and their impact on your credit score and your credit report. We're also going to talk about a really big question, kind of top of everybody's mind for sure right now, is loan assistance and loan forgiveness programs and what the future might hold. Again, if you have additional questions as I'm going through this, please don't hesitate to send those into Q&A. And as I mentioned, our presentation today is going to be general best practices. It's going to work for the average student loan borrower. But if you have specific questions for you and your unique situation and what you're wanting to do for your student loan repayment options, you can always reach out to the Financial Success Center. If you're a VCU alum, you can reach out to my office. If you're a current student who's soon to be graduating, you can reach out to my office, or you can reach out to the Student Financial Management Center and work with your financial counselor before you graduate. We're happy to be resources for you for those really specific and unique situations. And I will try to leave plenty of time for Q&A in between each of the sections, as well as at the end of our presentation today. Okay, so tackling student loans. What in the heck do you do? How do you get started? So you will see we had a lot of recurring themes about what to do with tackling student loans. Is there a best way? How do you pay down principal? How do you pay the least amount of interest? When should you finish paying off your student loans? So I took a lot of those questions that we got and have kind of created some best practices, and I'll talk through a little bit of each of these. So we have first things first, like, what is the best way to tackle your student loans? And in general, and you guys are going to go, man, this is just not super helpful. This is not going to help me pay them off fastest. But the best way to tackle your student loans is to make sure that you are paying the amount due on time every single month. And you have set it up into an automatic payment plan so that you can set it and forget it, and you don't have to worry about making those payments every single month. We're going to talk about how to pay that down faster. We're going to talk about how to pay the least amount of interest. But first things first, when you are paying your student loans, you need to make sure that you've got that automatic payment plan set up, that you are paying the amount due, that you are paying the amount that you're legally obligated to pay, and that you're paying it on time and it's coming out of your bank account and counting on time. Principal, how do you pay down principal fastest? So the principal, for those of you who may not know, principal is the initial amount of the loan. So that's the balance, and then interest will accrue on that balance, sometimes during school, sometimes after, depending on what kind of loan you've taken out. So how do you pay the principal down fastest? You make extra payments. You pay over the amount due. And there's a lot of confusion about how those extra payments work and how your regularly scheduled monthly payments work. Your lender has got a legal obligation for your payment to go towards accrued interest first. So you will see if you make a payment, so say you owe $100 a month and you're just starting out, you will see that a lot of that first payment that comes out goes towards interest and doesn't make a big dent in the principal and the total amount owed. Instead, it's going towards that interest first. And that is basically to make sure that your loan balance does start to go down slightly. So they're going to have to apply it to the accrued interest first. So if you want to make a dent in the principal, you're going to have to pay more than the minimum amount due. You're going to have to make extra payments, whether that's each month or every other week or once a year. You're taking one extra payment and doing 13 payments instead of 12. Maybe you're taking your tax refund and going, hey, I'm going to throw a chunk of this at those student loans. But that's how you're going to be able to make a dent in that principal a little bit faster and pay down those loans a little bit faster. When we look at like other loans, the mortgage industry, for example, on a standard 30-year mortgage, a big recommendation is to actually take your payment. So say your mortgage is $1,200 a month. A big recommendation is to take one extra payment and make that over the course of the year. So if your mortgage payment is $1,200 a month, you would take a 13th payment, you would divide it over those 12 months. So you would end up paying another $100 every single month. And that will cut years off of the life of your loan. You'll end up saving a lot of money. And again, you'll be debt free a little bit sooner, which is always a great perk. We got a lot of questions about interest. We got questions about prepaying interest. We got questions about paying the least amount of interest possible. And so prepaying interest is something that you can do if your loans haven't entered into repayment yet. So current students or loan holders who maybe have their loans deferred. If you've got federal student loans right now, they should be charged 0% interest at this point. Pretty much all federal student loans are being charged 0%. But if you had one that was still being charged some kind of interest, you could pay that down even before payments are due. And that works for some people because it kind of helps them to not pay quite as much interest, helps them to make that dent, have the principal be impacted a little bit sooner when they start making those payments, those regular monthly payments. So that can be helpful. One thing to note, though, is that Financial Success Center and myself, we don't recommend doing that if you don't have an emergency savings built up first. So if you're a current student or your loans are being deferred right now, you don't have that emergency savings built up, we recommend using your money to have that emergency savings first, and then to start making maybe an extra dent on your loans. 3 months of expenses for an emergency fund. And as we've seen in this past year, the whole reason to have an emergency fund is in case the unthinkable happens, like the entire country shuts down and people are out of work and you can't actually physically go to the office, so that you have a little bit of wiggle room to be able to make your monthly payments for your mortgage, your car payment, you're able to still buy groceries, you're able to take care of yourself and your family. So we want to make sure that you have that first. To pay the least amount of interest, again, those extra payments are going to help. You can look at consolidation or refinancing for a lower rate. We'll talk about that in a minute because it's not necessarily something that I would recommend right at this particular point in time. And then if you have federal student loans, the repayment plan that you're going to want to use if you're concerned about paying the least amount of interest is called the standard repayment plan. There are 7, 8, maybe 9 repayment plans that are available for federal student loans. The standard repayment plan is going to be the one that's going to save you the most money. The others will lengthen the amount of time that you're paying on the loan. It might lower the amount that you are paying at the beginning, at the life of the loan, but it will extend the life of the loan. So you'll end up paying more in interest before you actually finally pay that loan off. We also got a lot of questions about how much should you be paying, what percentage. And again, that really differs depending on your situation. If you are working full-time or if you are working part-time or if you're still in school, if you're a graduate student or a graduate assistant, the amount that you might pay might vary pretty wildly between person to person. So we really like to recommend using the balanced money formula to try to figure out, okay, great, like what should I be paying for, the things that I want, the things that I need, and then savings for future me. So balanced money formula means that you're taking 50% of your take-home pay and you are using that towards the things that you need. So that's groceries, that's your mortgage or your rent. That's your monthly payment for your student loans that you're legally obligated to pay. That's not the extra payments. We'll talk about where those fit in a minute. 30% gets spent on your wants, things that you want to do. So maybe that's, fun new clothes. Maybe in the before times, that's going out to a fancy restaurant, or going to the movies, or, whatever it is that's going to kind of give you quality of life, right? Something to enjoy. And then 20% is what we want to have for savings. And this would be retirement savings, this would be emergency savings, but this is also if you are saving future you money. So that could mean paying down a debt faster can count towards savings. So if you are paying an extra $100 a month towards your student loans, outside of what you owe, outside of what that minimum payment is, then that $100 would count as savings because it's saving future you money, right? You're going to get out of debt sooner. You're going to pay a little bit less in interest. So that's how we kind of calculate those pieces. So that's what I would use to try to figure out, hey, what kind of wiggle room do I have? What percentage should I be paying for my student loans and kind of everything else in my life? And then finally, when should I finish repayment? And the answer there is, it's up to you. Standard repayment plan is 10 years. So anything before then is great. Income-driven repayments can offer some kind of loan forgiveness, but that's after usually 20 or 25 years, which is a really long time to have a student loan payment. So the sooner the better, for sure, as long as you are not detracting from your quality of life. The best way to do it is to set a goal for yourself and go, how much do I want to pay per month? Or when do I want to be out of this student loan debt? And then work backwards and say, okay, if I want to be student loan debt free in 5 years, what does that mean as far as my monthly payments are concerned? What does that mean as far as extra payments that I have to make this year? And figure out what that looks like, and then figure out if it's feasible, if it's doable for you to do that and still have an emergency savings, still have some money to spend on fun things. Because again, if we don't have some fun, right, we're not going to stick with the plan, and we're gonna give up because we're bored and tired and not doing anything fun. So these were some of these really big kind of best practice questions. And so I wanted to kind of address those overall before we get into the next part, which is the part about consolidation. Were there any questions that I can answer kind of big picture, Letitia?
Let's see. And if people have questions in general, please put it in the Q&A. Consolidation, what are your recommendations for companies with the best loan consolidation plans? How to find or research them?
Okay, great. Well, so let's get into the consolidation section then. Perfect. So consolidation. So we're going to talk a little bit about consolidation. We're going to talk a little bit about refinancing and the differences. There's some nuances between the two. So consolidation, if you have federal student loans, and again, the vast majority of the people who graduate from VCU have federal student loans. So that's what we're going to primarily focus on today. If you've got private loans or something else, please reach out to my office and we can go through a more individualized plan for you as far as what might make sense for any non-federally held student loans that you might have. So consolidation, it means taking your loans and merging them into one. And this could be particularly helpful if you are looking at a particular payment plan, if you are looking to kind of streamline how your payment situation is working, if you have loans from a lot of different service providers, and instead of having little payments go to each of them, you want to instead make one larger lump payment every single month, have the same deadline, have the same due date every single month, consolidation can be particularly helpful. Consolidation is not refinancing. Consolidation is something that is offered to federal student loans. There is a direct consolidation loan. And this is a big difference because consolidated loans can still qualify for most federal payment programs, so repayment programs, so the income driven, or if you're looking at something that might lead to forgiveness after 10 years or 25 years, consolidation might still qualify you for that as long as you're consolidating student loans and you're not putting in a loan that was a Parent Plus loan or Graduate Plus loan, because that kind of changes what repayment plans are available to you and what forgiveness options might be available to you. Refinancing is when you're taking your loans and you're looking for a new service provider to give you a new loan, a personal loan at a different interest rate. Consolidation, they typically just kind of average your interest rates together. Refinancing means that a bank or a lender might come in and say, hey, we can offer you a slightly different interest rate, which could save you money over the long term when you're thinking about paying down those loans faster. At this point in time, if you have got federally held student loans, we don't recommend refinancing. We don't recommend refinancing because that means that they would then be owned not by the Department of Education and not by the federal government. And we'll get into kind of future plans and everything, but right now, forgiveness is something that is being talked about at a universal level. by no means guaranteed, but it would be much harder to find options for universal loan forgiveness for any loans that are not federally held if they're privately owned. So if you were to refinance your federal loans with a private loan servicer, and 2 months later, universal loan forgiveness happened, it was very likely that you wouldn't end up being able to use that benefit if you had moved your loans to a private servicer. So we want to make sure that you're not doing that at this particular point in time. So those were some great questions about consolidation. Oh, do we have another one, Letitia?
Yeah, we had a question, and I don't know if this is the right category or not, because I'm learning as well, everybody. So we had a question come in. My student loans are through FFELP, which I had to look that up, the Federal Family Education Loan Program. Do you recommend switching to a federal loan? And that might be more of a personal or specific question.
Yeah, so that is a good question. And again, those types of questions, like, absolutely keep them coming. But let's connect with me afterwards, and I'm going to have my email and website and everything up. I do offer financial counseling for VCU alumni. So if you've got some very specific questions about what makes sense for you and your family and the loans that you currently hold, I'm happy to work with you on that. So yes, good question. Absolutely keep them coming. But yeah, that really kind of depends on your unique situation. So happy to provide coaching there for you. Okay, we had a lot of questions about student loan impact on credit, on your credit report and your credit score. So how do student loans impact credit report and credit score? And this can be really confusing. So wanted to make sure that you all had the information about how your credit score is calculated in the first place. So you can see on this chart that primarily it's payment history and the amount owed is what's going to primarily impact your credit score. So your credit score is going to go up if you owe less, if you have a lot of credit available to you, but you're not using quite so much, you don't owe quite so much. Your credit score is really going to go up if you have made your payments, anything that you're legally obligated to pay. Again, so, student loan payments, credit card bills, those types of things. If you are making the minimum payment and you're making it on time and in full every single month, then your credit score is really going to go up. So the ways that a student loan can impact your credit score positively is if you're doing all the right things with your student loan. If you are paying it back, you're paying that minimum amount due, you're paying it on time. And again, that's where that automatic payments can really help, because you never have to worry about forgetting to make that payment. If it's automatically coming out of your checking account or your savings account, then you don't have to worry about, like, oh man, did I miss the payment this month? It's coming out. That payment due is going to be paid on time and in full. It can also help with some of the smaller areas that you see here. You see that there's length of credit history and there's types of credit. So again, life of a student loan can be, under a standard repayment plan, can be 10 years. So basically that can give you 10 years of credit history to say, yep, I've been making my payments, I've been making them on time. And so I have a well-established credit history. And this can help with improving kind of what your credit worthiness looks like for future loans. If you wanted to buy a house or a car or make some other large purchase or get a new credit card, that credit worthiness of being able to show lenders, show banks that you are someone who can be trusted to give that line of credit to, whether it's a loan or a credit card, can be really helpful and can boost your credit score and your credit rating. So there's that. And then types of credit. So this is basically portfolio diversification, but for your credit, right? Instead of your investment portfolio or retirement portfolio, it's saying, hey, I have got a credit card, and that's one type of credit, right? Credit cards are revolving types of credit. And then I have my student loan, that's a different type of credit. So it can allow for you to show some diversification where you can be trusted to pay back not only what's due, but that you can also be trusted to use different types of credit responsibly. So those are ways that it can improve your score. We did have some questions about, can a student loan lower my score? And yes, if you take out a lot in student loans, so you have a really high balance due, that could potentially negatively impact your score a little bit. If you miss a payment, if you're late on a payment, if you don't pay the minimum due, that's going to really hurt your credit score, right? Because again, we see that payment history there is the biggest part of your credit score. And we did get a question about, if I pay off my loans, does that hurt my credit score? And the answer is, it technically can, like, in a very minor way for a very short period of time, because you see that types of credit counts as 10% of your credit score. So if you all of a sudden don't have one type of credit on your credit report because you've paid it off, there might be a little blip on your credit score there, but that's going to rebound really, really quickly and should absolutely not dissuade you from paying off your student loans. That's not going to leave a lasting mark for sure. So, but this was kind of a way to I think address, how your credit is impacted by student loans. And then I'm happy to answer, any other questions about, what the impact of a student loan might be for your credit report and your credit score. I do see one.
Yeah, I was just about to say.
Oh yeah, perfect. Thank you, Letitia.
Yeah, no problem. I guess you kind of mentioned this or talked about this, but this particular question specifically said, do student loans negatively impact my credit score while I'm in school?
That's a great question.
Okay.
That's a great question. So if you've got a federal student loan, when you are in school, they will be in deferment, right? They'll be in deferment or forbearance, depending on the type of education program that you're in. But so you won't have payments due. So it won't negatively impact your credit score because you don't have any payments that are being required. What's going to negatively impact is when you get to that repayment period, which is 6 months after graduation or after you leave school, and you don't start making payments, or you make a late payment, or you don't make your payment in full. That's going to hurt your score. The only other way that it could potentially hurt your score while you're in school is, again, if you're taking on a lot of student loan debt. But for most young adults, student loans are usually one of the first ways to actually establish credit. So this could be a great way to build credit as long as you do have a repayment plan. If you have taken out a private loan, then that is going to be something that, you're going to have to make the payments while you're in school. So again, if you aren't able to make those payments, or you miss a deadline, you can't pay in full, or you pay late, that can negatively impact your credit. And again, over borrowing too much or an awful lot in private or federal student loans can hurt your credit as well. So it's just really important to, if you are still in school right now, that you have an idea of what your repayment plan is going to be when you graduate, so that you're not over borrowing something that you won't be able to pay back when you do graduate and those payments start coming due. It's a really good question. Thank you. All right.
Yeah, so I think that's all we have for credit. We did have some ones that came up that I think you might be getting to later. Oh, well, we have another one. Well, no, that might be later. Let's hold off on that.
Okay, very good. There was and I apologize, I'm going back to the consolidation piece. There was a question about where can you find banks or lenders who might do consolidation or refinancing. Again, I don't recommend refinancing right now. And I don't recommend specific companies. That my AFC certification kind of prevents me from recommending specific companies to you all. There is a consolidation option for federal loans. So if you have federally held student loans, you can certainly look at doing that. And then anything else outside of that, there are some great sites that I can recommend that are not-for-profit, and they are NerdWallet and Bankrate. And there's also one called Paying for College. And those all have great information about what kind of consolidation loans or refinancing loans or personal loans might be available to you. Again, don't recommend doing that right now while forgiveness is still being talked about at a high level, but those are some good resources for you to take a look at and see what your options might be.
And even with the consolidation, going back to that, and I know you can't recommend specific companies, but do private sectors offer consolidation for private loans?
Yeah, so you can consolidate or you can refinance with different lenders. So if you've got privately held student loans and they're with different servicers, or you've got several different loans with one private servicer, they might have a consolidation option for you. And again, if you want to review some of those options, or you identify some areas where you might want to move your loans and you want to talk it over, again, we do provide financial coaching. To VCU Alumni, we'd be happy to talk through those options with you for sure. Great questions, y'all. Keep them coming. Okay, so big question on everybody's mind is forgiveness And right, because that's something that is really being talked about right now. There are three primary programs for federal loans where forgiveness is a potential option. The first one, and this is available to technically anybody, is we have several income-driven repayment plans where your payments are based on your salary. So they're based on the money that you make. And you'll end up paying 10% or 15% of the money that you make, as opposed to based on what your loan balance is. So this is something that people can pursue to lower their monthly payments. It does extend the life of the loan. So if you are in one of these income-driven repayment plans, and again, there are several, after 20 or 25 years, depending on which loan repayment plan you're in, you can apply for forgiveness and to have the remaining balance forgiven at that point in time. So that's one way that you could look at doing some forgiveness. So if you have been in an income-driven repayment plan for a really long period of time, now might be a good time to kind of take a look and see how many years have you been making payments, and is forgiveness something that you might be able to apply for. The next one that we hear a lot about is public service loan forgiveness. And this has gotten a bad rap in the past couple of years because there has been some real challenges with people actually applying to have their loans forgiven. The way that this works is it's anybody who is working for a government organization or a nonprofit organization within the US. These individuals can enter into a qualifying repayment plan. They have to have qualifying loans, which for the most part are direct loans issued after 2007. So they're federally held loans. And so if you're in a qualifying repayment plan with qualifying loans and you're working full-time for one of those qualifying employers, so again, nonprofits, government organizations, those types of things. And so after 10 years, after 120 monthly payments, you can apply to have that remaining balance forgiven. And this is a really great option if this is something that you have been doing. However, there is a lot of paperwork required. You do have to make sure that you are certifying your employment, certifying your repayment plan, making sure that you've got all of the requirements for this program, that you've got them taken care of at the beginning. Because we don't want you to think that you're in public service loan forgiveness and get to the end and find out that your loans didn't qualify, or your employer didn't qualify, or your payment plan didn't qualify you to actually have that remaining balance forgiven. And that's where we're hearing kind of some of the bad reputation, the bad news about this particular program. So if this is something you're interested in doing, Fed Loan Servicing is the service provider for public service loan forgiveness for the Department of Education. So I would reach out to them. They've got a lot of really great information. They have those forms to kind of get you started, but this could be a really good option if you know you're going to be in the nonprofit field. And then finally, there's teacher loan forgiveness. And again, there are some really specific requirements for teacher loan forgiveness. You have to be at a full-time teacher at a low income elementary or secondary school, and you have to be working for 5 consecutive years. But again, you could have a portion of your loans forgiven if you meet that criteria. There are a lot of other additional forgiveness programs. There are forgiveness programs for nurses. There are forgiveness programs for teachers. A lot of them really vary from state to state. Teacher in the medical field tend to be the biggest ones, where a state might forgive a balance of your loans if you agree to be a doctor in a rural area, for example. There's also, if you're in the military, there are military benefits where you might be able to have a portion of your loans forgiven as well. And they recently expanded, if you have been disabled, permanently and totally disabled, they have expanded kind of the loan forgiveness or loan discharge for that portion of the population. So there's a lot of information about that right now. Outside of that, loans can be canceled for a couple other things, like if you were defrauded, if your school closed before you got a degree. Those things don't apply to VCU. We're a legitimate institution. We're obviously still open. But if this is the case for a family member or a friend of yours, there could be some other ways to have those loans discharged as well. So loans in the time of coronavirus. Just want to make sure that everybody is kind of aware of what is currently happening and what they can expect to happen over the next few months. And so during this time of coronavirus, we have seen federal loans move from accruing interest to being charged 0% interest. They are your $0, you're making payments, but they're $0 payments through September 30th. And that 0% interest has also been extended through September 30th of this year. So we're in okay shape, right? Where at least the federal government has recognized, hey, like this is a really hard time, and we really shouldn't be, collecting interest or trying to get payments on these things during this period of time. We want to make sure that you are prepared for entering into repayment. If this, deferment status doesn't get extended past September 30th, we want to make sure that you've got a plan to enter repayment when your next bill is due in October of 2021. So we had some really good questions about what is repayment going to look like. And again, studentaid.gov has got a whole FAQ page about this. It is a little bit dense. So I have tried to kind of comb through to give you all the highlights that will most likely apply to you if you've got federally held student loans. So you're going to get contacted ahead of time from federal student aid and from your loan service provider for federal student loans prior to payments resuming. So you will see that happen. You will get some kind of notification from them in advance. And I believe it's legally required to be 21 days prior to your next bill becoming due. So you will get some kind of communication, most likely in September, again, if this grace period isn't extended further. If you've been in a traditional repayment plan, then your loan servicer is going to recalculate your payment amount given the current balance of principal and interest, which most likely has not changed since 0% interest is being charged at this particular point in time. So you shouldn't expect to see a huge change in your payment amount due. If you're on an income-driven repayment plan, your payments will not change unless you are trying to recertify or recalculate what your amount due is. And if you are looking at, starting an income-driven plan or changing your income-driven plan, if your family income has changed significantly, and so you want to pursue a new payment amount, then you can absolutely recertify that income-driven payment plan between now and September 30th so that you're prepared for when payments resume. And I think we're getting some more questions about that. So I'm just going to pause and make sure that we're kind of addressing some of the questions that are coming in at this point.
Yeah, for sure. Let's go with this one. What are the chances of universal loan forgiveness? Do you have any updates on the probability of this? At least 10,000.
Yeah, that's a great question. So I was talking with Letitia before our webinar started today, that the joke all week has been that the Department of Education was going to come out with some recommendation for some universal loan forgiveness or discharge at 11:45, and that our presentation was going to be completely thrown out the window. I'm not a betting woman because I do financial wellness and I saw gambling just stresses me out. So and this has never happened before, right? So this is brand new situation. We have nothing to compare it to. So I can't give you a odds on what is going to happen. I would say it's unlikely that we're going to see 50,000. I would say it's unlikely that it's necessarily going to be an executive action. I wouldn't bank on it. It's not off the table though. So I would be prepared to enter into repayment in October. So that means figuring out what that payment is going to be that's due, making sure that you have that money available, or if you're going to need to apply for additional forbearance or deferment or a new payment plan, that you are doing that in advance, because it should not be a surprise to you come October 2021 that you are going to have a student loan payment due. Again, something might get discharged. It might. It's not likely, but it might. They might extend and change the 0% and the $0 due and have that extended a little bit longer. But we want to make sure that you're prepared for what is going to happen. So again, I would make sure that you prepare right now. I'm looking at my newsfeed to see if Department of Education has released anything. I don't see anything right now. Of course, if that does happen, we will reach out to VCU Alumni too to make sure that we're getting you all the resources for what might be necessary if some kind of discharge or universal forgiveness becomes a thing. But yeah, not a gambling woman. So.
All right. Let's see. Given the fact that student loans are on hold, for some loans, what is the general rule of thumb for paying in this downtime? So I guess what is your number one advice for that?
Yeah, so that's a great question. So if your income has not changed in the time of coronavirus and your loan payments have been paused, and you are not pursuing public service loan forgiveness, then or PSLF, I know that I've abbreviated it a couple of times, but if you're not pursuing public service loan forgiveness and your income is still there, you can be making extra payments right now so that you can be working down that principal during this time of 0%. Again, I would not do that at the expense of an emergency savings. I would not do that at the expense of having some financial security, but if you have that wiggle room to be making some extra payments right now, then absolutely do that, because you can end up, getting a couple free payments in there. Interest is not going to accrue, so you're going to be able to make a dent in that principal. So if you've got the wiggle room to do it, absolutely. But emergency savings first, 3 months of expenses.
Yes, that's the goal.
Yes.
Does COVID loan pause affect deferral of loans for May 2021 grads? I might have butchered that, but.
Yeah. So yes. So the federal government is not going to be collecting on loans. Now, granted, if you were graduating in May of 2021, then you have a 6-month grace period. So your payments wouldn't be starting until November anyway, October or November anyway. So yes, you are being charged 0% for your loans right now. So that is the way that it impacts it. But your repayment plan will start at around the same time as it would have, given that 6-month grace period. Good question.
Do you expect the pre-COVID interest rate to be the post-COVID interest rate? What are your thoughts on that?
Okay, so your interest rates, if you've taken out loans, your interest rates are your interest rates until you consolidate or until you refinance. So, you've already entered into a contract saying I'm going to borrow this much money at this percentage rate. Post COVID, I think they're maybe talking about borrowing rates, which were lowered last summer for undergraduate and graduate loans.
Okay.
And I don't expect them to go up exponentially. Usually they are pretty low interest rates anyway. So I don't expect them to go up tremendously, but that really kind of depends on the Federal Reserve, who sets interest rates for loans and credit and things like that, and savings accounts. And it kind of depends on what the Department of Education's priorities are for moving forward with student loans. Yeah, good question.
Do you want me to keep going through the questions, or?
Yeah, why don't we do, since we're getting, let me do this last little bit, and then we can kind of open it up to the last few minutes of Q&A.
Perfect.
That works. Okay, so what's next? I don't know. That ultimately, so again, Department of Education is going to be making recommendations to President Biden. So we will see what those recommendations are. They're looking at the constitutionality of loan forgiveness or loan discharge at a universal level, and if that's something that is available to be done through the executive branch of government, or if it needs to go through the legislative branch of government. So that's kind of what they're looking at right now. So again, it's not a sure thing. It's not a guarantee. So make sure that you have a plan to enter into repayment in October of 2021 for sure. If you have any questions about what that looks like, or you need to make a plan, or you need to change, what your payments due are, you need to kind of take a look at, what is your balance owed, make sure that you are taking a look at federal student aid or your loan servicer. And again, they will contact you 21 days prior to a payment being due. So you also want to make sure that your contact information is updated. So if you have moved, if your email address has changed, if your phone number has changed, anything like that, it is on you to make that payment on time when it comes in October. So if they're not able to reach you, that doesn't mean that you just don't have to pay it. So make sure that they have all of your updated contact information so that any information about how your loans might change, whether it's entering repayment or having this pause extended or having some kind of discharge available to you, that they're able to reach you and give you that information for sure. And yeah, so, Department of Education will probably make a recommendation like 2 minutes after this webinar ends and everything will be moot. But yeah. And so finally, just wanted to give you my contact information. I will flash this up again. I'll take it down for right now just so we can kind of do Q&A. If that makes sense.
Yeah, let's do it.
And yeah, happy to answer any other questions that you all might have at this point. But if you did want to make an appointment, there's my website, there's my email. And again, I'm happy to kind of discuss any specific student loan questions that you have for your unique situation. And I'm realizing there's a typo on this slide. Our Instagram is not our website. So it's the Money Spot. So you can follow us on Instagram, a little bit more student focused, but still some fun content that might be applicable to you.
Great. And like Carolyn said, if you do have questions, this is the time to get those in because we're just going to do straight Q&A right now. Yeah. So question that came in, when you are in school and your payments are in deferment, etc., will payments made during that period apply towards the principal after interest, or do you continue to accrue interest?
Such a good question. So if your loans are deferred and you are still being charged interest. So right now, all of our federal loans are deferred and they're not being charged interest. So payments that you make are going to go directly to principal as long as you didn't have any accrued interest already on there. If you are in school, there are two types of student loans, right? There's subsidized and there's unsubsidized. And so interest doesn't get charged for the subsidized loans until after you graduate. And for unsubsidized, it gets charged while you are in school. So typically, outside of coronavirus times, if you are making payments towards your student loan while you are in school and it's subsidized, then that's going to go to principal. And if it's unsubsidized, that's going to go to accrued interest first and then to principal, if that makes sense. Good question.
Great. So another question, I am a recent graduate and currently unemployed. What is the best way for me to start paying my student loans?
Okay, so if you were recently graduated, so that means you graduated in December, you're graduating in May. If you've got federally held student loans, again, they're on a pause. So that's going to give you some time to try to secure a job if that's what you're wanting to do. And there are other deferment and forbearance options. If you're having difficulty paying, you can absolutely work with those deferment and forbearance options. If you're experiencing a financial hardship, you can absolutely use those outside of coronavirus times to maybe extend a pause on payments while you are job seeking, for example. Again, if you have loans and you are job seeking, but you have those loans on pause through deferment or forbearance, typically outside of right now, they are still going to accrue interest, but you're not going to have payments due. So it's not going to negatively impact like your credit report or credit history.
Great. I've been getting a lot of, this is your student loan provider phone calls. Is there a way to confirm when these are fraudulent calls?
Yeah, if your loans are federally held, they're not calling you. Very similar to the IRS. The IRS doesn't call people, right? So anytime you get a phone call saying, hey, it's the IRS, that it's not the IRS, that's a scam. Very similar for federally held student loans. They will reach out to you via snail mail. or via your email. So for most, you will have an account, in Fed Loan Servicing or through Federal Student Aid. And so that's where you will actually log in, and all of your documentation, all of your correspondence will be in your little account related inbox there. They've even simplified it where, you can upload, your questions, you can upload, your employment certification forms or whatever it is that you're needing to do for repayment can all be uploaded through those portals. So there's no reason that they would be calling you. Yeah, so you can call them. You can absolutely call them and speak to somebody. I do recommend, though, anytime you are on the phone, that you ask for a follow-up email to be sent just to kind of confirm that everything that you've gone over is in writing somewhere, so that you're not, misunderstanding something that they might have said and ending up, missing a payment or paying a higher interest rate or not entering into the payment plan that you thought you were. Make sure you get it in writing afterwards. Good question.
That's good. If I've been making extra payments, will a federal loan be recalculated? Like, is that a possibility?
Yeah. So if you are in a standard repayment plan, so if you're in anything that is not an income-driven repayment plan, so for federally held student loans, that would be the standard, the graduated, and the extended repayment plans, and you have been making extra payments, your amount due will be recalculated before that October 2021 bill goes out. So at some point in September, your federal student loan service provider and federal student aid will reach out to you with that new amount that is due. If you're in an income-driven repayment plan, unless you want to change the amount that is due, you want to change the type of income-driven repayment plan that you use, your payments will be the same as they were prior to the pause. Good question.
Is it possible to retroactively apply for teacher forgiveness for 5 years of consecutive Title I service?
The student loan forgiveness programs typically do not allow for retroactive application. And that has been one of the big drawbacks for those particular programs. And that is some of where we were seeing some of the challenges with public service loan forgiveness. So I would reach out to your loan servicer and see if it is something that they would allow for you to retroactively apply for. There might be some special circumstances where they might allow that. Typically, they do not.
Got it. Thank you. And then any insight into using 401k or investment accounts to pay off student loans?
Okay, good question. Don't do that. Please don't do that. So there have been some bills introduced. I think there was one that was introduced at the end of last year or the year before to allow for people to, pull funds from a 401k to put towards their student loans. And I don't recommend doing that for a couple of different reasons. One, that's not, it might be helping your current financial situation, but that's hurting your future financial situation a lot. When we think about the interest rates that are being charged for federal student loans, so for undergraduates, that can be anywhere from 2% to 4%. And for graduate loans, that can be anywhere from 4% to 8%. Those are decently low interest rates, whereas your 401k can be earning quite a bit more than that. And if you're pulling money from that, you're basically stealing those future earnings from yourself. You're also, a 401k is pre-tax contributions. So you would be pulling out money to use for now and not for retirement. So you're kind of ruining that tax advantage savings, the tax advantage growth, and anything that you pulled, unless the law changed, you'd pay a penalty for. There are certain circumstances where you can use your 401k money or your retirement funds for like certain purchases, $10,000 for your first home, something along those lines, and not pay a penalty. But for the most part, you'd be paying a penalty. And you'd also be paying the interest. So the $10,000 you would be pulling would end up being $6,500, right, after tax, and then might get decreased even further by the penalty that you might have to pay. So I definitely wouldn't recommend doing that. If that's something that you are looking at doing, or you're having trouble with repaying, again, there are income-driven repayment plans. You can absolutely meet with my office to talk through what your options might be. Reach out to your servicer and see about some type of deferment or forbearance or lowering your monthly payments, what are your options in that way, but don't steal from your future self to try to pay your student loans off faster.
Yeah, and I just want to mention too, if you do plan on contacting the Virginia Credit Union Financial Success Center at VCU as a student, it is complimentary, and as an alum, it is complimentary.
Yes, yeah, free customized financial advice and programs, and that is something that we offer to the entire VCU community. So yes.
Last question that we have gotten, does a subsidized loan collect interest only after you graduate, and an unsubsidized loan only collect interest while in school?
Yeah, so subsidized loan, the interest, so technically they both accrue interest while you're in school. It's just that the Department of Education pays the interest for the subsidized loan. So you don't pay the interest that is accrued on a subsidized loan while you are still in school. When you graduate, you will start to accrue interest on that loan. The unsubsidized loan accrues interest the entire time. So from day one, it will start to accrue interest until you pay it off. So yeah, it will accrue interest for the life of the loan, just like any other normal, personal loan or a mortgage or anything like that. Good question.
And then we just had a question come through. Is Virginia Credit Union partnered with Security Plus Credit Union?
I don't know. I'm not an employee of the credit union. Our office, it was created through a partnership with the credit union. So we are sponsored by the credit union, but I'm not an employee of the credit union. So I do not know of additional partnerships that they might be involved in.
And then somebody asked for the Instagram handle again. They want to follow you.
The Instagram handle is the Money Spots. And again, that's more of an undergraduate focus resource, but there can be some really helpful, just general financial tips. So you can absolutely follow us on Instagram. And yeah, I'm sorry for the typo on my slide. Oh dear.
No worries at all. So those are all the questions that we have gotten in, and I think that we were able to get to all of the Q&A questions that everybody sent in and registered. So that is wonderful. If you want to pull up that slide again, so that people know where to follow you all. So thank you, Carolyn, so much for today's conversation and your knowledge and expertise on student loans. This was super helpful for me, and I've been out of school for a while now. So if you enjoyed today's conversation, we encourage you to register for our upcoming webinars in the Adulting 101 series that you should now see linked in the chat. I'm going to veer off because I just saw a question. Is the Virginia Credit Union for business students only? No. So the Virginia Credit Union Financial Success Center at VCU is not just for business students. It is for all students, all alumni, VCU community, right?
Absolutely. Yep. Faculty, staff, students, grad students, and alumni.
Yes. Yep. So lastly, everyone should now see a link to a short survey to complete so that we can get feedback and thoughts on today's event and how we can best shape our upcoming events. So if you aren't able to grab that link before we end today, we will also be sending it out via email within 48 hours along with the recording. And then somebody asked too, you all have such great questions. I love it. Can you watch previous workshops? Yes, it is on our YouTube page, and I think our chat bot just linked to that. So yes, it is on our YouTube page. Any last questions before we jump off here? No, okay, great. So on behalf of VCU Office of Alumni Relations, the Virginia Credit Union Financial Success Center here at VCU, and the VCU Alumni Recent Graduate Council, thank you all for joining us and have a great rest of your day. Thank you all.